What's up YouTube, Silver Dragons here, and in this video we're talking about gold and silver prices which have been brutally beat down over the past couple days. So let's do it. Thank you so much for watching my video. I do sincerely appreciate it. If you want to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. Alright, so it's no surprise, gold and silver prices are getting beat down. Here's a quick look at gold. It is down $33, currently below $1,800. Silver is down 87 cents, nearing the $26 mark. Platinum down 40, palladium down $219. I guess the biggest loser is rhodium, down $1,900. Base metals are also down with the exception of uranium, and that's not really a surprise since it's used for nuclear energy, and that's definitely getting pushed forward right now. So why is all of this happening? Well, if you remember my last video on gold and silver prices getting crushed, I said that you need to look at the news for any big things going on, and yesterday there was a big news item. Fed Chair Jerome Powell had some interesting things to say. Gold price plunges $40 as Powell says inflation will be like the lumber experience, is the headline of this Kitco News article that came out yesterday. It starts off talking about some of the dips, and we're going to skip over that since it's a little bit dated. Now, it goes on to say Powell still maintained that inflation is transitory. The problem right now is that the demand is very strong and incomes are high, Powell told reporters on Wednesday. If you look behind the headline numbers, you'll see that the incoming data are consistent with the view that prices are driving that higher inflation is from categories that are being directly affected by the recovery from the pandemic and the reopening of the economy. Powell drew parallels between the transitory inflation and the surge in lumber prices, which are now settling down after a massive rally. Over time, these things driving up inflation will be temporary. The experience with lumber prices is illustrative of this. Prices that have moved up really quickly because of the shortages and bottlenecks should stop going up, and in some cases should actually go down. And we did see that in the case of lumber, he said. Our expectation is that these high inflation readings that we're seeing will now start to abate, and it'll be just like the lumber experience. Powell added that the US might see the same situation play out in other categories, including used cars. Used cars are going up because of strong demand and limited supply, but we do think it makes sense that it will stop and reverse, he said. The timing of that is uncertain, and so are the effects in the near term. Now, I can kind of see where he's coming from in regard to lumber prices. I mean, lumber definitely was overinflated. We saw the price spike up. It was absolutely insane. And if something is overinflated, a lot of times it corrects and we see the price come down, which is exactly what's happening. But that doesn't mean that this is happening everywhere. This doesn't mean inflation is going to stop and even reverse. I mean, that is so silly to think. Of the many market update emails I got yesterday, this one from Jonathan Swires over at Monument was a pretty good read. It says, "Dear precious metals investor, this afternoon the Federal Reserve made two announcements that normally would be bullish for metals. Expectations of inflation were raised considerably," and I do want to point out he's not talking about the lumber comments specifically, but some of the other information as a whole. And number two, interest rates would remain at essentially zero through 2022 and maybe some of 2023. However, metals tumbled on one bit of commentary that rate hikes could begin sometime in 2023 instead of 2024 as previously indicated. Under normal circumstances, the stance would be viewed as extraordinarily positive for bullion. Not only will interest rates remain at historically low levels for 1 to 2 years, but the nation's central bank is acknowledging that inflation is heating up. In spite of this, gold, silver, and platinum all posed losses this afternoon. So it seems that rate hikes coming sooner than expected might be be the reason for gold and silver tumbling. Now, there is one thing we haven't looked at, and if you remember from my last video, we gotta check it out, and it is the US dollar index. It's the fourth one down. You can see USD index is up to 91.91, which is up over half a point. So I guess people have faith in the dollar again? By the way, since I started filming this video, silver is now under $26 an ounce. That just shows how fast the spot price is moving. I can't keep up. So when we see the spot price of silver and gold going down like this, as silver stackers or gold stackers, precious metals investors, what should you do? It's time to back up the truck, baby. Buy the dip. Everything just went on sale. I'm breaking out my honest value never fails silver rounds for this video. One of my all-time favorite pieces to stack and collect. This is just a generic silver round here, but they are gorgeous. Gold and silver are money. They have been money for thousands of years. And this little downturn in gold and silver prices is an opportunity for you to stack more at a lower cost. You can now buy more today than you could yesterday for the same price. Gold and silver are a long-term strategy. You're supposed to buy these and hold them for decades, right? I mean, that's what most people do when they're stacking precious metals. This is another reason why you don't want to buy all of your gold and silver at once. You want to dollar cost average. When you dollar cost average, you buy a little bit now, a little bit next week. You keep some dry powder in the keg, ready to roll. And when you see these dips, maybe you buy a little bit more than you did last week. And over the course of time, that stack is cheaper than it could have been. I mean, obviously, if you make a large purchase right at the bottom, then you're going to be doing okay. But it's really hard to tell where the bottom is. And honestly, is it just going to go up from here? Is it going to go down a little bit more? No one knows. I mean, I don't know. I don't have a crystal ball, but I know that over the long haul, gold and silver are a great storage of wealth. This is a great place to put your money. Now, before I wrap up the video here, I want to say, usually when we see the price go down a lot, we do see a bounce back up. So when do you think we're going to hit the bottom? Is it going to be at 25.75, at 25, 22? How low is it going to go before we see that bounce? Feel free to leave a comment down below in the comment section. I think we might be nearing the bottom here, but honestly, I don't know. It could go lower. So I'm buying now, and I'm going to buy more again when we eventually hit the bottom. And when it goes up more, I'm going to buy more because that's just what I do. I'm stacking silver. It doesn't really matter the price to me. I mean, I'm taking fiat currency and exchanging it for real money. So in my opinion, it's always a good time to do that. But anyway, I do want to say a massive thank you so much for watching my video. And I'll see you all in the next one. Silver Dragons out.